What's up, millennials? Buy the dip. That is something you hear quite often nowadays, and especially in a dip like we have right now. If you listen, for example, to Meet Kevin's live streams, you can hear him saying buy the dip quite a bit. And also if you listen to Kathy Wood's latest In the Know video, she basically says buy the dip as well. And also if you're on Reddit or stock tweets, you usually see people saying buy the dip. But how do you actually buy the dip? When do you know the dip is actually over? Well, something I use to help me a little bit with this is technical analysis. And in this video, I'm going to show you two of my methods that I use to actually buy the dip. Now, of course, this is not going to be financial advice. It's just going to be me showing you what I do to buy the dip, and it's not necessarily something that you need to do. So in this video, we are going to talk about two of my methods. First of all, we're going to talk about support, and then we're also going to talk about exponential moving averages. Now, let's first talk about that support part. Because you might have heard about support and resistance. What is that exactly? Well, basically shows you where the bottom and where the top of price action is. Right here we have a chart of NPA, which is the SPAC that is going to be acquiring AST Space Mobile. And here you can see three horizontal lines over here at $23.13, over here at around $16.26, and around here at around $12.37. Now these are all levels of support and resistance. We can see over here, for example, this first horizontal line on the bottom. This indicated a nice low on the chart over here. The price did not go lower than this level, more or less. And these are just, candlesticks I'm looking at. I'm more looking at closures of candlesticks than wicks. If you don't know exactly what that means, maybe look it up, but I'm looking at closures, not wicks. Okay, so with regards to that horizontal trend line, you can simply draw that in once a bottom has been formed, has been confirmed. And then, as you can see over here, we also drew in a nice line. This is going to be our resistance line. The price action was resisted over here. It didn't go higher than this, and then it actually corrected itself back towards more or less that same line we have been looking at before. So this is a nice support line. This is a nice resistance line. And often what happens when resistance is broken, it turns into support as well. But now we can see that, well, the trend went up, went all the way up here, had resistance over here, came back down, and now we see that the price action is actually back to that first level of support we have been talking about, which happened all the way here in January. So we can see that often price corrects itself towards a previous level it had support on. So that is one of the methods that I use to determine when I want to get back in a certain trade. Let's say, for example, that I had decided to take some profits over here, and at some point in the future I would like to get back in my position, or maybe I just want to add more to my position. Well, in this case, what I could have done is say, okay, so we have a nice support over here at $12.37 more or less. We had a nice line over here, we came back to that line, and maybe that is actually a good moment to buy more of that stock, because it often happens that that support is maintained and then price action goes back up afterwards. Of course, right now we don't know if that's actually going to happen for sure, because technical analysis and support and resistance, all that kind of stuff, is not going to happen guaranteed, but the likelihood of the price going up in the next coming weeks is probably higher compared to the price going down in the next couple of weeks. Here's a second example of support. This is the chart of ChargePoint, which just merged with the SPAC SBE, of course. And this just merged, and it had a nice little sell-off after, well, February, more or less, 10th of February, we saw a nice little sell-off. And usually what happens after the merger has been confirmed, then we see an additional sell-off. But I've taken, you might know that, I've taken some profits all the way up here, more or less, I believe at $42.70, if I'm not mistaken. Again, my Discord premium members were, of course, alerted for that. And now I've decided to wait to see if we would go back to this support level of, $26 more or less, which was created by this low right over here. You can see that this candlestick closed right over here. Or actually it opened right here, but yeah, this is a candlestick closure, which was right at this moment. So this is a nice support level as well. I drew that in a while ago, and this support level is what I use to get back into my position or to add a little bit more to my position. I haven't fully entered my position just yet, but I already added a little bit on this candlestick on the 4th of March, because we were actually hitting this support level. So I got in a little bit more in my position. And if it's going to drop more in the next coming 30 days, then I'm going to be adding more. And I'm actually looking at this level more or less, which was created by this high and this high over here, which could also turn into support in the future. So this is the level of $17.84. I'm not sure if it's going to go that low, but if it's going to go that low, then I'm definitely going to add more to my position. And then the last brief example is Teladoc. Teladoc was actually trading within a range between like $185 and $235 for quite a while. And then it broke out of that $235 range. It went up all the way to almost $300, and now it has a very, very sharp sell-off all the way back to that support level more or less of $185. It's now actually a little bit below it, but I would actually see this as an opportunity instead of a risk. So it might not be a bad moment to get into your position if you don't have any of this stock just yet, or if you want to add to your position. And of course, that's not financial advice. The next indicator I would like to talk about, and an indicator that I use a lot to scale back into my position, is the exponential moving averages. And I have four myself. I have the 8, 13, 21, and 55 daily or exponential moving averages. And I use the 55 exponential moving averages quite a lot to get back into my position, because it's often used as support as well, but then on a moving average. Here we have the chart of SPY, which is an ETF for the S&P 500. And we can see that this 55 EMA is this white line over here. The EMA simply tracks the average price of a certain stock, or in this case of a certain ETF. So in the case of a 55 daily exponential moving average, it tracks the price of the last 55 days, takes the average of that and plots it on a nice little line. And if it's an exponential moving average, like in this case, it gives more importance to the most recent couple of days instead of the earliest couple of days within that 55-day period. So that is more or less what a 55 daily moving average is. And here we can see that it's often used as support. We can see over here, if we go all the way back to June and even to May, we can see that the price action went above this white line, so above that 55 daily exponential moving average. And it stayed above there quite a while. Here we saw a large divergence between price action over here and the daily exponential moving average over here. So a large difference between price action and that line. And then it quickly came back down to that line, bounced off it, came back up, bounced back down, came back down on that 55 EMA and went back up. And then we see again large divergence, a large difference between price action and the daily EMA, comes back down, even overshoots it a little bit during a few days, comes back up, comes back down again, overshoots it again, comes back up. And then right now in the most recent price action, you can see that on the 29th of January, you had a beautiful bounce of the 55 EMA as well. And now we can see that we are also working right above that 55 daily exponential moving average. So let's actually see if this is going to hold this time, if the 55 EMA is also going to be used as support in this moment. Another brief example would be Chainlink. Chainlink is an altcoin, an alternative cryptocurrency, and we can also see a beautiful bounce of the 55 EMA over here. So also this could have been a very nice opportunity to get back into your position, or maybe add a little bit to your position. And the last example is Aave. This is also a cryptocurrency. We can see that this line has also been maintained pretty well. It has been used as support over here, over here, over here, and also most recently over here on the 26th, 27th of February. I actually took some profits on Aave at $493, and now I actually went back into my position at $330. I of course notified my Discord premium members. Because of that 55 daily exponential moving average, I added some back to my position, and now it does seem to bounce off that 55 EMA beautifully and now seems to go back up. So yeah, again, the 55 EMA can be a very helpful tool as well to buy that dip. Now, of course, keep in mind that this is not a guarantee that it's always going to work out like that the support is always going to hold, that the 55 daily exponential moving average is always going to hold, but it is usually more likely that the price is going to be held by these support lines and by these EMAs instead of the price even going down even further. And of course, these are not the only indicators you can use for technical analysis. There are many, many other indicators that I personally use, but support and resistance, but also the EMAs are very powerful tools, I would say, within technical analysis. So those are two tools that I use myself to buy the dip, and I'm actually wondering what you use to buy the dip. Are you looking at technical analysis? Are you looking at valuations? What do you do to buy the dip? With that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!